Hey guys, how's it going? It's Henry. Before I jump into today's video, I want to let you know that I just launched a one-on-one coaching. It's not that expensive. It's actually a really special program. It's completely new, as you can see on the screen right here. It's going to be one-on-one coaching where I can actually send you voice messages. Yes, I'm going to send you some daily voice messages, send you images. You can send me images, send you trades. I'll send you some coaching call links. It's going to be a very interesting program. It's limited to 10 spots. It's really affordable. I know because I look at all my competitors. I price it lower than them and I give a better service than them actually. So anyways, if you want to go ahead, check that out. It's in the first link in the description, okay? So let's get on with today's video. I want to talk about Palantir, and Palantir is a stock that I own. I don't have a huge position right now, but I am loading up on it in my other portfolio. I have a few hundred shares, and I'm actually running the wheel strategy. So this is a strategy that I've been using for a very long time. In fact, I have 3 videos on this channel about the wheel strategy. Let me explain to you what the wheel is, how I'm using it, and how specifically I am trading Palantir using the wheel strategy. So just jumping right in, I'm currently selling some put options, okay? How the wheel works is it's a system. You sell put options to get into the stock, okay? So I'm selling some put options to basically potentially acquire the stock. But what I mean by that is when I sell the 15.5 strike, I'm saying that I'm going to buy Palantir at 15.5 and I actually get paid when I sell the put option. So when I sell the put option, I literally get paid up front. If Palantir goes below 15.5, I will have to buy it. I get paid either way, but the only difference is I may have to buy it if it's below 15.5. If it's not below, then I don't have to buy and I can just keep selling puts. Now, the thing is, once you get put, okay, once I do get put, 2 things happen. First of all, my average cost actually goes down. So my current average cost is 20. And then when I actually get put, my shares will increase. But when I do get put, I then start selling covered calls. So as you can see right here in my portfolio, I'm gonna go explain this in more detail. I'm actually doing covered calls and the wheel at the same time, which is a little bit interesting. Let me just say, first of all, I did get assigned. I was running the wheel on Palantir to begin with at $20. That's why my average cost is exactly 20. I didn't just buy the stock or set a limit order at 20. What happened was I sold some put options and I got assigned at 20, and now I am down 10% on the stock. Now that's totally fine. I'm not all in on Palantir. I'm fine to be down 10%. I personally believe that it's going to recover, and I'm running the wheel here, but I want to get my average cost lower. So I am continuing to run the wheel strategy and actually dollar cost average. So I don't know if any other people do this, but for me, when I run the wheel strategy, I actually add to the wheel strategy and I keep increasing the size of the wheel strategy if I like the stock. So for me, I like Palantir, so I want to keep increasing my position on Palantir. Currently 500 shares, and I ended up selling 5 more contracts, so I want to get 500 more shares at 15.5. This will basically reduce my average cost by quite a bit, from like 20 down to 17.75. How do I know that? Well, the middle of 20 and 15.5 is 17.75 because 2015 is 17 and a half, and then there's like 50 right here. So I'm actually going to bring my cost down to 17.75, which will be great. And then I can sell some more put options. So I can keep selling put options. Either I get assigned, cool. If I get assigned, my average cost goes lower, or I don't get assigned, which is also fine because I'm collecting premium. Now, what I'm also doing is while I have these shares, I'm just selling covered calls because I want to generate some income so I can keep traveling, so I can keep, living the lifestyle that I live through cash flow. Okay, options are fantastic for cash flow, and the wheel strategy is really amazing for cash flow. Whether you're retired or you're trying to build a portfolio, it doesn't really matter. You can grow your wealth, and this strategy produces a lot of cash flow because every single week or 2 weeks, you are collecting premium when you're selling a put option or when you're selling a call option. So look, what you want to do when you're selling a put option is you want to do some technical analysis. You want to ask yourself, where am I happy to actually buy the stock? For me personally, I'm pretty happy to buy it at 15.5. And if I look at the 3-month chart, there is a really, really strong support right here at around $14.69, all around the $15 area, okay? We see a lot of bouncing of the stock. And even right now, we see that the stock is bouncing off of the $17 revenue. So for me, I really want to invest in this company and I want to keep increasing my position size while also getting my average cost lower. Now, this is an interesting strategy and I won't bore you with the details, but there's a strategy called martingale strategy, which is involved with gambling. Now, obviously, I'm not gambling, but the market is sort of an educated gamble, if you know what I mean. So what I'm doing with this gambling strategy is I'm essentially getting my average cost lower and lower and lower and lower because at some point, this stock is going to bounce back up. Now, I'm not saying like it's really bad because it's not. I'm only down 10%. This is literally nothing. And from here on in the next 1 or 2 years, this stock could be a $30 stock, could be $35. There's a lot that Palantir is doing. They have a lot of amazing contracts. Their revenue is increasing, and overall, they are a really good AI play. And AI is very valuable. You guys know that I don't like NVIDIA, but I do like Palantir. I think Palantir is one of the best stocks in the market long term. Short term, nobody knows. So the way that I'm personally running the wheel strategy is I'm selling put options and then I'm doing covered calls to get out. Let me show you what that would look like, okay? So I'm gonna go to trade Palantir options, and if the market was open, I would totally execute on this. In fact, I may do a limit sell put just to have it open. That way, when the market does open up, this will get executed for me right away. So in terms of expiration day, a lot of people ask me, do you go for weekly options? Do you go for 2-week options? And here's the thing, it doesn't really matter, and it also really matters. Short term, if you have more time on your hands, you can go for short-term expirations. However, because I work with lots of busy folks that are doctors, lawyers, whatever, they don't have as much time, so doing weekly options isn't as feasible. Yes, as a beginner, weekly options are more exciting, you get more feedback, and you understand what you're doing quicker because you have more orders that you are placing. However, as you scale your portfolio, as you have more money, and as you have more experience, you're not going to be as addicted and obsessed with trading. And to be completely honest, you can get the same results by doing monthly options as you do weekly. Because whether you collect $1,000 a week or $4,000 a month, it's the same thing, right? So look, I have a few different options here, and I'll actually show you a few different expiration days. I'm gonna actually show you why it doesn't really matter, but I actually wanna show you in lead by example. So first of all, let's just do something really short term. Let's go to December 15. I'm going to go ahead and sell a, let's just say a 16.5 put. Well, this is not that far out of the money. In fact, if I go to the delta, it's 16. So it actually is pretty far out of the money. The implied volatility is 55, which is fairly high. This just means that the option is volatile. It's volatile, making its premium more juicy. However, here, the premium is really not that high, but at the same time, it's because the expiration date is so low. Now, this completely doesn't make sense if you're using a commission-based brokerage. It makes no sense to make $9 and pay 65 cents in commission. Even if you're trading for free on Robinhood, it doesn't mean that the order execution is amazing. Although the bid-ask spread here is really good, it's 9, and then the ask is 10. Here's what I would do. Here's what I would recommend instead. You can definitely do the short-term stuff. I know some of you guys, I can't change your mind. Me personally, I'd rather go out for, let's say, January 19, which is 41 days out. That means once I set this position, I can basically forget about it until 41 days from today. Now, yes, I could do some, interesting things and like manage this position and potentially like roll it. But to be honest, the more you do in the market, the less your returns are. I'm a big fan of keeping it super simple on this channel, being very straightforward and honest, because just simple scales. All the fancy stuff, managing your position and rolling it often and closing this position and switching your money from one stock to another, you really don't need that. You want to stay the course of the market, be invested in really high quality companies, and ride the wave so you actually make money with the trend, with the market, and with momentum. Okay, you just ride. Don't go against the ocean, go with the ocean. And as long as you go that direction, you're gonna be building your wealth. So for me, 41 days out, I'm gonna go for a 16 sell put. Now you will see that I can collect $48, which is essentially 3%, because 16 times 3 is going to be about 48, I believe. 16 times 3, this is 3%. This is literally a 3% return. It's actually a little bit better because you're not putting up $1,600 worth of collateral. You're actually putting up $48 less, because since you are pocketing the $48 when you do sell a put option to run the wheel strategy, you're essentially collecting $48 right away. So that $48 actually helps reduce your collateral. So you're putting out $1,552. Amazing for smaller portfolios, right? Amazing for folks with 5K, 6K, 10K portfolios. Heck, even a 3K portfolio could afford this position. And this is how you would get started. You would collect $48, which is not life-changing money, but this is how you consistently grow your wealth. It's not by targeting $480 in one day or making $2,000 the next. And yes, I know my website says $1,700 per day, but that's because I built my portfolio. I put in 10 years of work. That's why my life is so easy, because I put in 10 years of being a warrior, going out there, going to war, practicing, making mistakes, buying programs, working on Wall Street, getting a degree in finance. I've done this over and over, that it's super easy for me. This is the easiest part of life, and it can be for you as well if you put in the work and understand how the market works and have a repeatable, consistent system. You just invest money, Then you trade options with covered calls, selling puts, and the wheel strategy. And by the way, the wheel strategy is just selling puts and calls, which are my two favorite strategies. So the wheel is literally the best strategy that I have ever personally used to build my wealth. Now, it's not going to take you from 100K to 700K, because how I did that was I was doing some buying strategies, some bullish strategies. I was doing spreads, which by the way, in the description, you can check out a spread trading video. But the wheel strategy is the way to consistently get to retirement. This is where you can actually enjoy being on the beach, traveling with your family, going abroad like me. I've been in every single country in Europe. I'm in Dubai right now. I'm going to Thailand, then I'm gonna go to Bali, Indonesia. So I'm traveling a lot, and that's because I want to experience the world. I want to learn more about myself. I want to learn about other cultures. And because option trading gives me that freedom and that lifestyle to go wherever I please, because it's all online income. And the wheel strategy is really the biggest proponent of that, especially a stock like Palantir, because the implied volatility is good. As you can see here on January 19, this is a 3% return. Implied volatility is really good, and the volume is really good. Now, why is the volume important? Well, you need liquidity. You need liquidity when you're trading, and here Palantir is a really good stock because the bid is 48, the ask is 49. There is a ton of liquidity. I mean, you can really trade this easily because there's not a huge wide gap. When there is a gap, that's costing you money. But here, it's very good because it's very tight, and the open interest is also very high. So Palantir honestly trades like an Apple. Like, this stock is so liquid, which makes it very good for option trading. So in my personal opinion, I would go out 41 days to January 19. But also, to be honest, if you want to trade very lazy and just collect safe income, you can also go out further in terms of date. You can go out to like March 15. Now, let me tell you what would happen in the future if you were to get assigned. So let's say that you get assigned at $16. What you can do then is you can start selling covered calls. So you can sell a covered call at, let's go to call, so sell call. You can sell a covered call at like $19. If you want to learn the full formula for covered calls in less than 20 minutes, I have the perfect covered call formula in just 20 minutes. You'll learn everything that you need that you can watch on the screen right here.